So one of my YouTube subscribers recently told me, sorry, one of my video course students recently told me, Rohit, why don't you give a name to your trading system? Why don't you give a name to the framework that you are using to trade stocks? So I just came up with a name called as the Orange Trading System. I call my system the Orange Trading System because recently I put out a video on my YouTube channel in which I talk about the fruit basket analogy. If I ask you to pick orange from a fruit basket, what will you look for? You will look for an orange, right? You will not look for an apple or a pineapple. You will look for an orange because I told you to do so. Similarly, the stock market is like that fruit basket, and I'm looking for a specific type of a stock which meets my criteria. And if I don't find a stock which meets my criteria, I just prefer to sit back on cash and relax. Okay. So I'm looking for that specific orange in the stock market. If I don't find it, I'm happy to sit on cash. Now, in good market conditions, there are a lot of oranges. In weak market conditions like we are in right now, you won't find many oranges. Okay. So that's how the name came about, the Orange Trading System. Now, one of my students, my coaching students, he told me that Rohit, when you do the five kinds of analysis, uh, there is a specific order which you are following, which you have not discussed on the YouTube channel. So, can you discuss what is the specific order? Where do you start? Where do you end? So, that is why I am making this video. One is to give a name to my trading framework. This will simplify things for a lot of students. This is what I'm doing for every stock, if you must have noticed. Okay. And the flow is also very important. So let us begin. So you start here with filters. So every day when the market closes at 3:30, the first thing I do is I go to MarketSmith and I filter stocks. I have a specific filtering criteria. I use those filters and I filter stocks. Now, the good thing about filtering stocks is if you are using a one particular filter, you will notice that the number of stocks that come in that filter, they are either increasing or they are decreasing. So, for example, in my filter, 3 weeks ago, the number of stocks was 95. 2 weeks ago, it was 43. 1 week ago, it was like 29. So, what do you see? The trend, it is decreasing, which means the market is getting weaker and weaker. Okay. But on the other hand, I have seen times where the number of stocks that show up in your filter, they keep on increasing. Why? Because the market is getting stronger and stronger. So this is one way to get a feel of the market. So currently the market is in a rally attempt stage. So I see a decrease in the number of stocks that show up in my filter. But anyways, after I filter, that's the first step. And I do this daily, okay? Daily, same filter, no changes. After I put the filter, I get a list of stocks. Okay, whatever be the list of stocks. Usually it is less than 100. Okay. Once I get that list of stocks, my first step is liquidity analysis. What do I look for in liquidity analysis? Well, I look for a price more than or equal to 20. It should not be a penny stock. Then I also look at volume should be more than 1 crore. Average traded volume, the number of shares should be minimum 200,000 shares. There should not be a red flag on the stock. The stock should be traded on NSE. It should not be a restricted stock. So basically, I am looking for a stock with good volume, good liquidity, which does not have any criminal history like a red flag or something. Okay. That is my first filter. That is the first thing I look for. So you must have noticed a lot of times when a stock has a red flag, I don't even go to comparative, technical, market, and fundamental. I don't even do this analysis. That is why I continue to say that all these five kinds of analysis, it takes me less than 10 seconds to do all of this because you might not reach the second step. Most of the stocks are rejected here or here. Okay. If not these two, then technical. Okay. 99% of the stocks that show up in this list get rejected in first 3 4 steps. Okay. So that's liquidity. Then we come to comparative. Comparative, what do we look for? We look for relative strength. We look for industry group rank. We look for institutional demand. We look for industry leadership. We also look for industry strength. I have discussed this many times on my YouTube channel. Check my recent videos. Okay. Then we go to technical. In technical, what do we look for? Is the stock in a confirmed uptrend? Is it in a stage two confirmed uptrend? Is it forming a base? Is it forming a early or middle stage base? Is there a blue dot inside the base? Blue dot means 52-week high of the relative strength line. These are the things that I look for in the technical. Then fundamentals. What do we look for? Sales growth, EPS growth, ROE, margin. That's it. Very, very simple. Nothing complicated here. Then you go to market analysis. What are the four types of market conditions? Confirmed uptrend, uptrend under pressure, rally attempt, confirmed downtrend. Very simple. Four kinds of markets. MarketSmith gives you what kind of market condition you are in. So that helps you decide how much position size you should take. If you are buying a stock which is fundamentally weak, that's a swing trade. If you are buying a stock that is fundamentally strong, that's a positional trade. And position size is decided based on market conditions. I take a swing trade only when the market is in a confirmed uptrend. I take a positional trade when the market is in a confirmed uptrend, uptrend under pressure, and rally attempt. Only thing is, in rally attempt, I keep the position size small. When the market is in a confirmed downtrend, I don't take a positional trade at all. So, in short, in a confirmed downtrend, I don't trade at all. I sit on cash. Okay. By the way, if you notice, just couple of days before Christmas, I came on cash. I'm in 100% cash since 23rd of December. And if you notice, from 23rd December till today, today is what? Like 19th, 20th of January. I have not checked the date. What is the date today? From 23rd December till today, okay, the Indian stock market has lost close to 15 lakh crore in market capitalization. From the time I went on cash till today, you can check the Economic Times. There was a brief period in 3 days. I think the market lost 12 lakh crore rupees. A lot of people have lost a lot of money in the market. Why? Because they did not follow this rule, the market analysis. When the market gives you signs to exit, you better take an exit. You remember the videos that I made on Dixon and Keynes? All of those stocks were sold in a period of 2 days. Okay, just 2 days, because I saw every other stock coming down during those 2 days, somewhere around 23rd, 24th of December, just a couple of days before Christmas. Since that day till today, I have not bought a single stock because I see that the number of stocks coming in my filter are decreasing. Okay, 15 lakh crore rupees, that's billions of dollars being wiped out from the Indian stock market. The market is weak. Okay, so position sizing, market analysis helps you decide what is the position sizing. Check these arrow marks. First is filters, then stocks, liquidity, comparative, technical, fundamental, market analysis, position size. Once you decide the position size, then you go to trade execution. You put the trade, you make sure you buy that stock in that yellow color band. Okay. Then you move to the next step, risk management. Means what? Stop loss. Once you take a trade, you have to keep a stop loss. That could be 8% or some technical level, 3%, 2%, whatever. Once you keep a stop loss, then the next part is trade management. This is where trading becomes an art. You need to have rules for selling, you need to have rules for partial selling. And then the whole process repeats all over again next day when the market closes. After that, start filtering again. Okay. One small thing I want to mention here, I had spoken to MarketSmith. Their ratings and their data gets updated by the next day morning. So let's say today is Tuesday, market closes at 3:30. So by Wednesday, 7:30 morning, all the ratings get updated. Okay. The price volume data gets updated. That is not a problem. But the ratings, the rankings, it takes time to update that. So overnight they run processes. So on Wednesday after 7:30, if you check your filters, that's more accurate data. So that's one thing I wanted to share with you, because most of you, after watching my videos, have started using MarketSmith. So you need to know when the correct data you will get. There will be some minor difference between Tuesday and Wednesday, but Wednesday after 7:30 morning, whatever you get, that's the precise data. You can confirm this with MarketSmith. So this is the framework that I follow. Okay. A lot of people sometimes they only focus on fundamentals. They invest their money in a stock, and then when the stock starts to fall, they wonder what's happening. Okay, they did all their analysis, but wait, they did only fundamental. They did not look at liquidity. They did not look at comparative market technical. Okay. These are important things. Read books written by Mark Minervini and William O'Neill. They will talk about the importance of all these things. So this is the framework. This is the flow chart I have created for you. I teach this system in detail in my video course. So have a look at this system. This is a very important flow chart. Maybe take notes when you are watching this video. You have to follow this process. Most stocks, by the way, will get rejected at this technical level. Most of the stocks. Okay. If they reach fundamental level, at least if not fundamentally strong, you can at least take a swing trade. But for that, you need the market to be in a confirmed uptrend. Remember that. So thanks to my YouTube subscribers and my video course students, they are giving me some nice advice and feedback. My video course student told me to give a name to the system, and another one of my student, he told me to, you know, give us a flow chart, like what to do first, what to do next. I mean, what is the point in doing fundamental analysis on a stock which only has like 7 candles in the base? You are anyways not going to buy the stock, right? It's clearly written in Mark Minervini's book. Like, no matter how great a company is fundamentally, if technically it is not set up well, he will not even look at the stock. Go and read Mark Minervini's book. He's clearly given that. So there is a specific order. Okay, and I wanted to show you this order. So I hope this video gives you the kind of summary, the framework that I use when I look at any stock. A lot of students send me stocks like, BSC. Somebody told me to look at BSC. BSC I rejected because there is a red flag. Somebody told me to look at Dixon. I rejected because there is a red flag. Somebody told me to look at Choice International. I rejected because technically it was in the base number 9. Somebody told me to look at Vijaya Diagnostic. I rejected because I think the fundamentals were not uh, great. Somebody told me to look at Piramal Pharma. I think I made a video on Piramal Pharma. That I rejected maybe because of the fundamentals or the comparatives. So you see, whatever I am rejecting, like recently Motilal was rejected, Divi's was rejected. The primary reasons were fundamentals. Rest everything was fine. The reason was fundamentals. Because in a weak market condition, I am not going to buy a fundamentally weak stock. Like buying a weak stock in a weak market condition is a recipe for disaster. Okay. So any stock that I select or reject, it all comes back to this framework. Okay. What you see, these 5 elements, this is about stock selection. That is a skill you have to master. Then you have to master trade execution and trade management. So there are 3 skills you have to master: stock selection, trade execution, trade management. Okay. Stock selection is like half the battle won. Okay. If you can get through these 5 steps properly, then trade execution, trade management is not a big problem for you. Okay. And by the way, when it comes to trade journaling, when you look back at a stock that you bought 6 months ago, look at what was wrong or what was missing in your analysis. Was it a stock selection problem? Was it a trade execution problem? Or was it a trade management problem? If you lose money on any stock, it is attributable to one of these 3 things: stock selection, trade execution, trade management. Okay. If you are losing money on a particular stock, it usually is attributable to one of these 3 factors. Okay. So I hope this model system framework has helped you. Make sure you take notes. Okay, note down whatever I am discussing. This will help you a lot. Next time you look at a stock, please consider these things. Okay, thank you so much.